Hey everybody, how are you? This is Dean again with Right Time Mortgage. And today we're going to do part two of what is the best rate for an FHA loan, or how to get the best rate. And the reason we're doing part two is I had a lot of follow-up questions, a lot of phone calls came in after our first video. And so because of the questions that were asked, I wanted to explain it a little bit more and break it down. So today we're actually going to do a real short video. We're going to look at an actual rate sheet, show you how everything is priced, give you an idea. Now keep in mind, you might be watching this a year from now, 6 months from now, a week from now, and the rates will be different. But I want to show you how they're actually priced so you get a better idea, okay? Well, let's get started. Anyway, so a gentleman called me up, and he was from a state, and, you know, we're licensed in California, but I help people all over the United States. He was from a state where the average home price was about $250,000, $300,000. Where I live in Southern California, it'd be very hard to find a house at that price. You're looking more, you know, $400,000 to $600,000, depending on the county. We have counties where it's very hard to get anything under $1 million. So just to kind of give you an idea. And I'll show you why that's important in just a minute. So right now I want to go to the rate sheet. Let's click over to that and I'll show you what we have and you'll understand it a little bit better. Okay, so if you look on the rate sheet right here, this is a FHA fixed rate between 16 and 30 years. Means if you anything less than 16 at a 15-year rate, you get a better interest, or fixed 15-year term, you will get a better interest rate. So this, just consider this a 30-year fixed. Over here, we have the interest rates. Over here, this is based on a 15-day lock, a 30-day lock, or a 45-day lock. Now, what that means is we can close fast. We can close in less than 2 weeks on a regular basis. But it's safe to do a 30-day lock. And so if you were to make an offer on a property and we came in and did a 30-day lock, and for some reason after the inspection you wanted this repaired and they said no, and you went back and forth, and it didn't close in 15 days, well, you'd be happy that you had a 30-day lock. And what that means is your interest rate and the fees are locked. No matter what the market does during that 30 days, nothing can change. And that's important. Okay, so let's come back here. Okay, so when we're looking at this, I charge less than a lot of people in Southern California. Well, less. I don't know anybody that charges as little as we do on our origination fees. The reason is I don't have a huge marketing staff. I process a lot of my own loans, so I don't have to pay somebody for that. I've been in the business for 25 years. I've done processing, underwriting. I really know how to get things done quickly. And we have a lot of technology today that helps me with that. Anyway, but I get everything by referral in these videos, so I'm not out there paying a lot of money for marketing. So I charge 1.5 points right now for conforming government, FHA, VA, those type of loans. 1.5% origination fee. Let me explain that. So when you look over here and you see on a 15-day lock and it says 1.5, that would be a 2.5% rate. If you go on a 30-day lock, that's 1.45. So it would be safer to do 2.625. And why is that? Well, I'd get paid 1.5%, and the other 2.241 goes to other costs you have on the loan, reducing your expense. All right, that would be the rate I would quote you. Now, I have people in my area that on a regular basis, and they're stuck. Most of the wholesale lenders, you set your commission, and you cannot change it for 90 days. In other words, if you like Sally B more than you like John Jones, you can't give her a lower origination fee. You're stuck with it. If your mother wanted to do the loan, you can't say, oh, Mom, I'm going to do it for free. You're stuck with it. Most lenders are 2% is actually considered low or higher. 2% or much higher even. So let me explain that. The gentleman that called me, he was buying a house for $250,000. His credit score was between 620 and 630. He thought he was getting a high rate because it was like 3.4, 3.4, maybe 3.5, 3.625, something like that. And but I said, look, let's explain something. I charge this amount, but I'm doing $400,000 and $500,000 FHA loans. If you're looking at a $250,000 home, that home and that loan is every bit as much work as a $600,000, $700,000, $800,000 home, right? So that gentleman who's charging you that, he probably is getting above 2%. So I'm thinking he's probably right in here on a 30-day lock, which would give a 3% rate, right? But then you come down here under the government price adjustments, and we see if your credit score is between 620 and 639, there's a 1.25 hit that has to be paid for that. Remember, even though FHA loans are designed to help people who wouldn't qualify, everything in mortgage pricing is based on the risk to the investor, right? Higher risk, the investor needs a little more to make up for it. So now we're going to take that 1.25 and we're going to add it. What did I say? He was probably at 2.6. Would put him at 3, almost 4%. Well, right there, 3.25. That's a great rate. That is a great interest rate. On the next video, what I'm going to do, because I want to keep this short, I'm going to go on Zillow. We're going to find a housing track. And we're going to look at the home for sale, similar amenities, and a home for rent, dollars to donuts. That rate will blow away the home for rent. And you've locked in your hedge against rental inflation, and you have tax write-off, and you're preparing, because home prices always go up, so you're preparing for the future. You have a solid investment in your future that's very stable. Anyway, that's what I wanted to show you. One of the things that can affect the rate will be the neighborhood you live in, or the state or county you live in, the average home price, because remember, a lot of these brokers, a lot of these lenders, they have administration fees, they have marketing fees, they have a lot of expense I don't have. If you're in California, hey, I can give you this rate. If you're not, I will help you find a really, really good, honest, and equitable mortgage broker for your area, and you can talk to them about that. But then where you live, or the amount of the loan in that area, the average cost of homes in that area, and your credit score can affect your interest rate. Very important to remember that. Hey, that's enough for today. You guys have a great time. I'm going to leave my our phone number and the address to our website. If you want to go check that out, get a quote, give us a call. I'll be happy to answer any of your questions. Until next time, bye-bye.